The best of Money Matters. Right Business.
Welcome to The Right Business, where we dive deep into the stories of trailblazers who dare to disrupt the status quo, find the gap in the market to find the right business. Hello, I'm Hongbin Jeong. As impact-driven business models become more central to solving global challenges, Asia-Pacific is emerging as a key region for scalable, purpose-led innovation. At the center of this movement is Venturebeam, the world's largest impact investor platform, helping to connect transformative startups with global capital. With partnerships across the region and tools like its free Venture Impact Score, the platform is raising the bar for transparency, accountability, and measurable impact in venture funding. So how exactly is the platform reshaping venture investing in the region? Why is Asia primed for purpose-led growth? And what's next for the ecosystem of impact? Well, joining us today to share more is Diana Kam, who is the Chief Executive Officer of Asia Pacific at Venturebeam. Hi, Diana. Welcome to the show.
Hi, Hongbin. Thank you for having me today.
Thank you so much for joining us. Well, Diana, Venturebeam can be described as one of the world's largest impact investor platforms. So for those just tuning into this conversation, what exactly is Venturebeam and how is it different from traditional venture capital platforms?
Well, I guess most traditional venture capital platforms that exist today operate more like a crowdfunding models, with angels syndicating on early stage deal flows. And none of these platforms focus on impact investing. So instead, if you will, think of us as a hybrid VC investment firm, where we are built and operated by VCs for VCs and family offices and institutional investors. So what do we mean by that? We provide a platform where professional investors can co-invest in high-quality deal flows seamlessly, and exactly where we replicate the offline venture capital process in a seamless digital environment. So we built this entire platform. So the goal is to facilitate co-investments with professional investors worldwide and accelerate fundraising for high-impact entrepreneurs. So to support that, we have developed a digital network of over 200 vetted professional investors. So how it goes is we curate and vet high-quality deal flows using our rigorous screening tools. So instead of a crowdfunding platform where they put up a deal, and just share with deal information, we actually have to score those deals that come through our platform with a very rigorous AI algorithm scoring methodology. So we test on their business scoring, the business traction, business models, their go-to-market strategies, their cap table messiness and all that what traditional VCs usually look for when they screen a deal. So we do all that right at the beginning of the curation stage. Then once they've successfully passed our business scoring, we actually then subject them to our proprietary impact scoring tool as well. So because we are the only platform that focuses on both business and financial return deals as well as impact deals, they have to score well in both categories before then we open them up to a next level of vetting, which is where we bring forward these deals to a panel of VCs that sit on our VC panel with various VCs with their various sector expertise, depending on the deals that we brought. And then they will then assess whether this is the kind of deal that they would invest in with their appraisal, and then also give them a deets to say whether they want to lead the deal. So it's basically really a VC process offline that is then performed on an online process, where now we don't only have local investors that can look at the deals, we're actually exposed to a global network of investors everywhere, regardless where you sit in the world, to look at deals. I guess the vision is really to create a movement, engaging our VC peers worldwide to explore deals that are from any part of the region, that also adopt this impact-oriented investment approach to curate high-quality deals that can deliver both financial and impactful returns.
All right. Well, how does Venturebeam then identify and support startups that are truly impact-driven versus those simply riding the sustainability trend?
We have a very robust screening process, as I mentioned earlier, using our proprietary design impact methodology that's informed by expert impact investors. So we put in a lot of effort to curate this impact score. A lot of the sustainability trends focus early on climate, but we believe that to create real impact, you need to look at both people and the planet. So basically our decision trees, we look at people and the planet, human rights, diversity, inclusion, and then nature-based, as well as then climate solutions. So, that's why we're very rigorous, and we definitely subject every single company to such scoring methodology so that it's consistent, and we are we are not biased when we look at the scores and how we evaluate companies.
Okay. Well, then let's talk more about impact investing here. The term has gained a lot of traction in recent years, but not all platforms walk the talk. So Venturebeam has taken a structured approach with tools like the Venture Impact Score, which you mentioned earlier. So how was it developed to meet this specific gap that other platforms are unable to plug, and how does it help startups and investors align better?
So in the recent Founders Forum Asia flagship event, where we serve as the official impact partner, I brought up some statistics at a panel I moderated in. For instance, in McKinsey 2023 report, startups with clear impact metrics raised valuations that are 30% higher than their peers. Bain & Company in 2022 reported that impact-driven startups are 2x more likely to secure follow-on funding as they appeal to a broader investor base. And Techstars in 2023 reported that 65% of top accelerators, including Y Combinator, 500 startups, now reject startups lacking measurable impact. So why are startups not doing all this at the moment? And why are there not enough tools or platforms or measurements to help them get themselves appraised and assessed? The reality is most existing measurement tools are overly complex, requiring burdensome data collection and reporting. Startups are already very stretched thinly in survival mode, prioritizing revenue growth and profitability over cumbersome impact frameworks. So that's where we decided that there is a gap here, and we wanted to step in to solve this problem. Our tool simplifies the process by relying on lightweight self-assessment, not exhaustive data audit. We evaluate a startup's intent, mission alignment, and operational practices, not just their business model. For instance, our questions will ask startups if they claim that they have a commitment to gender diversity, then we will verify it with their hiring policies and their workforce ratios. We focus on proof, not paperwork, reserving the right to validate key claims without overwhelming founders with data collection. So the goal is really to provide a minimalist, actionable framework that helps startups embed impact early without distracting from their growth. On the other hand, for investors, we hear from them a lot of times that their LPs are increasingly demanding impact accountability. So our tool really offers VCs a scalable solution. They can let their portfolio companies self-assess at regular intervals, and we're able to then create this system where we track progress over time, turning impact into a measurable, manageable metric. In short, we really want to make impact assessment practical for startups and provable for investors.
All right. Well, Asia Pacific is incredibly diverse in terms of startup maturity. I imagine your approach in Indonesia or Vietnam looks very different from, say Singapore or Australia. So how do you adapt your strategy to, serve these very different markets?
Well, I guess while our core strategy remains consistent across markets, the only difference is we tailor our focus to each country's unique sector strengths and development priorities. Australia's advanced innovation ecosystem excels in deep tech solutions for climate and renewables, while Indonesia and Vietnam present massive opportunities in agri-tech, aqua-tech, and financial inclusion, sectors that are ripe for disruption given their traditional economic foundations in their industries, and also the potential for livelihood improvements in these developing countries. So I guess the approach is similar, except that we look at different sectors and we look at different stages of the companies and where we can help the most. And what unites all these markets is the universal need for impact-driven solutions in areas like health tech and ag tech. So that's really not a difference. The common thread is identifying where technology can create both financial returns and meaningful social environmental progress within each of the country's specific contexts.
Okay. What have you then found most surprising about building an impact investing platform here in Asia?
Well, I guess we've heard a lot from investors early on. While many agree on the need for impact investing in Southeast Asia, most respond with cautious optimism, warning us that the region's VC landscape is still in a developing stage compared to the Western markets, let alone specializing in impact investing. Some argue it's too early to focus on this niche. A lot of them sometimes, they actually jokingly say, hey, good luck to you. I mean, we thank you for doing this, but good luck. But we see this as a strategic advantage. By specializing early, Venturebeam is actually carving out a unique position in the market. When investors seek quality impact deals, or founders pursue mission-aligned funding, our brand will stand out as the go-to platform, creating top-of-mind recall in this emerging space. More importantly, we're batting on long-term tailwinds. As Gen Z and Gen Alpha become the dominant economic force, the heightened environmental and social consciousness will actually accelerate demand for sustainable investing. We're building the infrastructure today for the market of tomorrow. And even recently in Asia Pacific, we can see some of the leaders and governments doing a lot of effort in this area as well. We see Temasek driving a lot of initiatives, when we look at Ecosperity Forum annually and the surrounding site events that are curated to really support growth and traction in impact investing.
Well, on top of all this, Venturebeam just facilitated a $7.3 million funding round for Viact, an AI company focused on sustainability and safety in high-risk industries. I mean, that's a big deal, especially as you're first in Asia Pacific. So what made this such a defining moment for Venturebeam?
While we're a young brand without an established track record, the founders we work with consistently recognize our genuine commitment to the ecosystem and trust our ability to support them through our global network. This trust was powerfully validated when Viact, despite operating in one of the toughest fundraising climate, managed to secure an oversubscribed round. I guess that's really the defining moment for Venturebeam. Is when we heard from Viact that their peers and counterparts were surprised that they were able to raise such a big amount, marking the largest raise for a computer vision company in Asia Pacific and potentially globally. So we're really, really proud of that, and we hope to continue to do more in support for companies alike.
Amazing. Well, besides Viact, you've also helped facilitate a 30 million euro Series B round for X-Ocean, a company working on carbon neutral ocean data. Now, that's another big signal that impact and innovation can go hand in hand. What drew you to that company, and what do deals like these say about where the market is heading?
X-Ocean is revolutionizing ocean data collection. They're using unmanned surface data to collect ocean data that is more accurate than the satellite, while achieving 1,000x decarbonization in the process. At the same time, with such an innovative company technology, they're able to scale rapidly with very healthy EBITDA margins. This is a $200 million company now with, very strong EBITDA financials and healthy numbers. This is not only a signal that impact and innovation can go hand in hand, but can also drive exceptional financial returns. So this is what we want to emphasize and that's what drew us to this company. At first glance, Viact and X-Ocean seem worlds apart in what they're solving, yet they share very similar, powerful similarities. They're both mission-led, both tackle urgent real-world problems with undeniable purpose, both a scalable execution. Each has delivered 2 to 3x year-on-year revenue growth while maintaining strong profitability. This isn't just luck, it's validation. A new wave of entrepreneurs is proving that solving meaningful problems can be both scalable and profitable. And investors are taking notice. And we're proud to back founders who align impact with execution and deliver results that matter.
All right. And I mean, overall, you've brought together over 200 venture capital firms, family offices, and institutional investors under one roof. So what kinds of trends are you seeing from the investor side? Are they becoming more impact conscious, or are they still largely return driven?
We're seeing strong enthusiasm from the VC community, eager to collaborate with us. That's really positive. Let me first address a common misconception head-on. Impact and financial returns are not mutually exclusive. In fact, this is Venturebeam's core purpose, to demonstrate that purpose and profit can powerfully coexist. We're not a philanthropic platform. While philanthropy has its place, real systematic change requires mobilizing private capital at scale. That's why we meticulously create companies that deliver both competitive returns and measurable impact, making it easy for traditional investors to participate in this movement. The proof? Most of our network wouldn't classify themselves as impact investors, yet they actively engage with our views. When presented with opportunities to back great companies that also happen to do good for the world, their response is simple: why not? And why wouldn't we?
Well, before we let you go here, Diana, what's next for Venturebeam then? Are there any new sectors or countries that you're specifically or especially focused on?
We're excited to announce the launch of a private syndication platform here. It's actually a tech-enabled solution for VCs and family offices to efficiently syndicate their deals. But we're not stopping there. I mean, I guess we see that we're basically building this technology already, so why not share it with the broader community who wants to syndicate their own private deals? But we're not stopping there. We also recognize the critical liquidity challenges in private markets, especially in Asia Pacific. We are fast-tracking our secondary services to unlock trapped capital and fuel more investment into high-impact companies. We're hoping and we're working very hard to launch these secondary services, hopefully in the later part of this year or early next year. This is really about solving the fundamental market problem that we keep hearing from our investors and our founders. Without liquidity, private capital stagnates. And without fresh capital, we cannot support the exceptional founders solving the world's most pressing challenges. So looking ahead, in the longer term, we are also, developing intelligent tools to streamline investor reporting because we're committed to building more than just a platform. We are creating an ecosystem that delivers real value by continuously listening to and involving with our network of investors and founders and solving their pain points.
All right. Very interesting. Well, thank you so much, Diana, for joining me today.
Thank you so much.
Thank you. That was Diana Kam, who's the Chief Executive Officer of Asia Pacific at Venturebeam. This has been The Right Business with me, Hongbin Jeong.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.